Hi guys, in this video I'm going to cover the content of BTEC Level 3 Unit 3, the types of expenditure, which is part of business finance. So what are the types of expenditure? There's capital expenditure and there's revenue expenditure. What is capital expenditure? Capital expenditure is used to buy items that's going to stay in the business for a long period of time. They are also known as capital items. Capital items are assets that are bought from capital expenditure, such as machinery. Capital items are also known as non-current assets. Now, the types of capital expenditure are non-current assets and intangibles. So what are non-current assets? Non-current assets are items that are owned by a business and they're going to stay in the company for a long period of time. They're also known as tangible assets, and that's because that item can be touched. They are also shown in the balance sheet, which is also known as the statement of financial situation. So a balance sheet is a financial document that a business will have, and that's going to show the net worth of a business, and it will balance the assets that they have and the liabilities that they have. And some examples of non-current assets are machinery, equipment, vehicles, etc. What are intangibles? An intangible asset is an asset that is owned by the business, but it cannot be touched, but it does add value to the business. Types of intangible assets are goodwill. Goodwill is when one company buys another company, but the name and the reputation of the business is already known. So they already have a customer base and they already have clients. This will then increase the value of the business and add value to the business. A patent. A patent is a legal protection of an invention of a business. So this stops other businesses from copying their idea, and it allows the business to launch any innovative products. Trademarks. Trademarks is a symbol, a logo, a brand name, or a color scheme that helps the customer identify the business. And brand name. The brand name helps the customer distinguish the business from other competitors. It promises the customers of what to expect from the business. What is revenue expenditure? Revenue expenditure is spending on items on a regular basis. So these expenses are shown in the income statement. What are the types of revenue expenditure? The first one is inventory. So this is when a business, they provide a good or service, they're going to have inventory so that they can then provide their customers with the good or service. Then there's rent. That's the cost of the business using a premises that doesn't belong to them. So then they're going to pay regular monthly payments. There's rates. So businesses will pay non-domestic rates. So they're going to pay money to the local council for services such as streetlights, and that will be calculated based off the size and the location of the premises. Then there is heating and lighting. Heating and lighting covers payments for gas and electricity, and the business will pay regular bills. Then there is water. So payment for water supply can be a fixed rate, or it can depend on the amount of water that is used. There's insurance. So a business is legally required to take out insurance on a number of things. One of those things is building insurance. So it protects the building from any damage. Then there's contents insurance. That protects the things inside the business from any damage. Then there's public liability insurance. That protects the people in the building from harm and injuries. And there is employer's liability insurance. So if the employee is injured at the work, then the business will be protected against any claims or any legal cost. Then there's administration. Administration is the paperwork that goes on within a business. It can be internally or externally. And administration has costs such as postage, printing, stationery. Salary. Salary is an annual amount of money that is given to an employee, which is divided into equal monthly payments. Wages. This is an hourly rate that is paid to the employee, and it depends on the amount of the number of hours that they work. And there's marketing. That's cost that involves attracting customers to the business. So that could be advertisement, that could be promotional material, events. Then there's bank charges. Banks will charge the business for each transaction that they make. So every time they write a check, if it's paid or if it's written, and whenever cash is deposited into the bank. Interest paid. So if the business has a loan or a mortgage, then the financial institution will charge interest on that. There's depreciation. Depreciation is used to spread the cost of an asset over its useful life. So it matches the cost of an asset against the time it will be used in a business. There are two depreciation methods. The first one is straight line depreciation. So that is when an asset is depreciated by a set amount each year. Then there's the reducing balance depreciation method. That's when the asset is depreciated by a set percentage with the remaining value of each year. Then there's discount allowed. So when the business offers discounts to customers, that's an expense to the business. It reduces the amount of money that comes into the business. Hopefully I helped you understand the types of capital expenditure and revenue expenditure. You can pause this video and try these practice questions. If you liked the video, then give it a like and subscribe for more. If you want updates on new videos and resources, then you can follow my Instagram. And if you want resources to this video, then go to my test shop.